Aloha and welcome to Java. Thank you for joining me. This is for Wednesday, February 7th, 2024, middle of the week here. So let's go ahead and start in with the MMRI has come back a little bit, showing a little bit of a drop in risk since yesterday. We've got the relative strength of the dollar and the 10-year yield watching those as well. So the dollar pulled back a bit in its strength. That's allowing stocks to have a little bit of room to run. So at the moment, we've got the stocks are looking forward to the green. Lower, we've got volatility still on an increase though, and futures mixed. So we've got a couple of things we'll be looking forward to. So we did have Moody's downgraded New York Community Bank Corp to junk. Yesterday, this bank plummeted yesterday, small and regional bank. There will be more to follow. So a lot of those banks, as we were talking about before, were set up precisely to fail when this time comes. Since the 2008 banking crisis, they wanted fall guys, basically, they could hand all of their toxic trash to and allow them to fall so that the larger banks could just maintain their assets. So, right now, for the stock markets, we've got a green morning if the trade numbers are good prior to market open. But we'll also be watching 1 o'clock. We've got another bond auction, and then Fed President Bowman is going to be speaking at 2 o'clock. So we'll be watching those for our trade numbers, crude inventories, and then also that 10-year note auction at 1 o'clock. So I've got a couple of reports that are going to be prior to market open on Thursday. Jobless claims should be a big one if it's off. That could cause major market movement. And then also the 30-year later in the day, but setting up your trades for tomorrow. So we've got our earnings for today, both before market open and PayPal, Disney, Mattel after the close. So, little short news, we've got Ford shares surged on a dividend boost, and because they are lowering EV spending, this is missing the other part. They also cut quite a few jobs. So they're working on more what they call lean balance sheets now, since they have dropped some of the costs of labor. So, long term, I am still bearish on vehicle companies, in specific Stellantis, because they are facing some headwinds. So, Ford did surge yesterday, but my longer plays, that's going to be one probably to the downside, not financial advice. That's just what I'm doing. So, if you're going to follow what I'm doing, please be cautious. Take your own trades, do your own research. So, with that, the markets, I want to say a quick note about free market and value and the factors that are behind that. We have no free market right now. As long as the Federal Reserve keeps stepping in, we've got massive inflation and manipulation of the currency. So, in the old days, buyer and seller would determine the price of something. Wanted to sell you something, it would be what it would be worth to you or some other buyer I could find to purchase. But nowadays, it's based more on inflation and what the general headwinds of what the central banks are doing. So, economy does not equal the stock market. They are completely disconnected now. It's nothing about the free market. So, we've got a mismatch on this economy. And then, even as inflation is not dropping, but it's slowing in its pace, increasing, people are still having an issue with affording their general daily uh, expenses. So we've got treasuries bracing for the largest ever 10-year auction. So we'll see what happens. We flood this market. I expect it to have an effect. We'll see what goes on. We have Fed's Mester, Loretta Mester. She sees the Fed gaining confidence to cut interest rates, but she's saying later this year. So I think maybe more June timeframe. Personally, right now, we'll see what happens. So we've got the market is recalibrating. I think that's part why they pulled back a bit after that jobs number, watching the 10-year treasury. And now this is kind of giving away that they're talking about central banks lowering borrowing costs. And then also we've got the short-term bank run funding rates. So we'll be watching those as well. They're ending March 11th. That's an important date. So I think we should kind of have these guys get together and sing a song because, as we've been talking about before, central banks are going to act in lockstep. They have to, otherwise, they will destroy one another's currency. In particular, if the Fed cut first, they would decimate either the euro or whatever bank did not cut right along with them. So we've got the Bank of England talking about how they need to see more evidence of inflation before they cut because they have to follow the Fed, and also ECB talking about the same thing. They have to follow their data against cutting rates too soon, because what could happen is if they cut too soon and the inflation comes roaring back, will come in the form of hyperinflation, and they all know this. So with what happened yesterday, talking about the regional banks with Moody's cutting NYCB, went down to junk. So they're saying that the calm returns and all is well in the banking sector again, talking about how strong and resilient they are. However, Chairman Powell did strike that language from his speech. So going forward with Moody's cutting and also Fitch ratings kind of backing them up. So they're closing the lowest level in 27 years. Yellen is talking about commercial real estate risks again, obviously, and they're putting all this blame onto regional banks. So this is designed this way since 2008. They set up a lot of banks to be fall guys, so there will be more, just to warn you. So with that, we've got JP Morgan, their trading desk. They're going bullish on stocks, and that's all because of what we just talked about. After what the Federal Reserve is saying, the stocks trading, people are still buying in by the dip. So they're saying long term, there's poor structure below the stock market, but right now, still bullish. So moving down into the sectors and across globally, we've got the European Union talking about Russian energy. They're still purchasing it because they need it. They are purchasing through a secondary hand, but it is Russian oil. With that side, we've got US crude oil production is now sharply, it's down from highs. So United States can't produce. It's why they're trying to get in buddied with more of South America to kind of get their resource. So along with this, Russian gasoline production fell in January. They're saying that part of this was because of the basically they're having issues with between the weather and then also the shipping because Suez and issues with that. But I see this as an actual slowdown, as we're seeing with Germany's industrial numbers. They came out really poor. So I think between that, and that's all on inexpensive energy. So they're not purchasing at the moment, trying to hold through. And I think that's what that is really saying. So saying it dropped due to storms and maintenance works, but now they're already rebounding this past week. So we'll watch what happens with this, with their outputs. Also, European Union with all of these sanctions, because we're looking at going to war with Russia, NATO versus Russia. They can't ban Russian aluminum because they're still dependent on them. So all of this is just kind of posturing and more ways to create trade and the war to kind of manipulate the economy. If you don't see that, we can get into that a little further. So we've got Biden is demanding Congress pass Ukraine funding. He's demanding as if he's in charge. So that is a problem. What's going on in here, we'll see in a moment. We've got more than $1 billion in weapons missing that were supposed to go to Ukraine. It's more than that in the funding, and it's hitting private bank accounts and pockets prior to even getting there. So with that, the Senate Democrats are pushing to require that he must consult Congress on weapons sales, not just to Israel, but in general. And he should. That's how the checks and balances are supposed to work. So we've got millions of vets that got health care and benefits under an act, but thousands left out. So we've got tons of funding going to war and leaving out veterans with health care. And that's, in my mind, an imbalance, but that should be happening through Congress, through elected officials. and you should have a say in where your tax dollars go. We know that's not how it's working, but that's how it was supposed to be. So, a couple of lava updates, and you'll hear this because it's pretty big news. The Kremlin has confirmed that Tucker Carlson has interviewed Putin, and it is going to be streamed on the platform X. And Musk has said that they're not going to put it behind a paywall, and they're going to allow it. So Musk is talking about, we've got a couple of officials that are saying that Tucker Carlson, for doing this, should be arrested. So what happened to free speech? He's not allowed to go and get a view from any other side than what mainstream media is putting out. So they're heavily suppressing what is being seen in the US. And with that, we've got one more story just about one of the things that I've been talking about global water scarcity. So in this particular instance, they're talking about pollution, but facing pollution, poison, different ways that can come in, as well as infrastructure to it. So make sure if you're not filtering your water yet and you're on a public source, I strongly urge you do it prior to them coming out with the news of studies that they have done retroactively on water you've already been drinking. So with that, if you wouldn't mind, please like and subscribe. Thank you kindly for joining me again, and until I see you again, my friends, stay free.